Welcome back to Sharp Financial Thinking. If you're new here, I'm Scott, a Brit living in Ontario, Canada. It's simple. I'm not here to sell you anything. I'm not here to promise you overnight success. I'm here to share you real investing lessons. Lessons they don't teach you for free. In my last video, we covered 5 things you should never do when investing. And today, I want to flip that around. So we're going to talk about the 5 things you should be doing when investing, especially as a beginner. Avoiding mistakes is important, but actually knowing what you're doing builds success. These are the 5 things that I have handpicked to choose from. And hopefully this will help you starting out, or it will help you if you're trying to refocus your investment journey. Right, let's get into it. Number 1, invest for long term. When I say this, I'm talking about years, not days or months. The longer your money is invested, the more chance it has to grow. That is effectively what we're doing here. We're creating compound interest to build wealth. Avoid the noise. Don't listen to hype. Don't listen to influencers. Stick to your journey and invest for as long as you can. The stock market is designed to reward patience, but most beginners approach it like it's a casino without even knowing. Most will stare at daily chart movements. Most will stare at daily price movements. They stress over red days and they jump in and out of the market based on headlines. Long-term investing is where the real wealth builds because time allows compounding to work. Compounding is boring at first and you will hardly notice it. Then suddenly it's doing very well and you're excited. When you think long-term, dips don't seem so scary, and then you look at a different perspective. The stock market all of a sudden goes on sale. Dips just become normal and they also become opportunities. To have a shift in mindset, stop asking yourself, what will I do this month? And start asking yourself, what will my wealth be in 10 years' time? Number 2, invest consistently. You don't need to be a market genius to be successful. You just need consistency. Consistent investing, or dollar cost average, is you are always putting into the market, whether it is up or whether it's down. When you are consistently investing, you're putting in money all the time, regardless of the market condition. This process removes emotions. You're now not guessing, you're waiting. You're playing the market the way it should be played. As I said it a few times, markets do go up and markets do go down. But consistency moves volatility out the window over a period of time. Investing consistently is where a lot of people fail. They often will buy when it is good and stop buying when it is slow and poor. In my opinion, that's the worst you can do. You're buying high, selling low. When you buy high, you've also got to buy low. The people who win are the people that continue to invest even when times are hard. The people who win are the ones who keep on going when the market becomes uncomfortable. Number 3, understand what you own. If you don't understand what you own, then don't hold it when the markets get tough. We'll break that down. So when you are investing in a company, an ETF, bond, you should always ask yourself these simple questions. What does it do? How does it make money? And why do I believe in it long term? When volatility hits, and it will, understanding creates confidence, and confidence prevents panic. Most bad investments happen because people don't truly believe in what they are investing in. Number 4, have a simple plan. Now, this relates to one of the points on the things you should not be doing when investing, and that was always do not invest without a plan. So we're flipping it around and we're saying make sure you have a plan. This is one of the most underrated points in investing. A plan doesn't need to be complex, it just needs to exist. So you need to know why you're investing, right? So ask yourself these questions. Is it for financial freedom, security, retirement? How long am I going to invest for? Is it going to be 5, 10, 20, 30 years? And how much volatility can I actually handle? That is a very important one, because I see some people get incredibly stressed when they see their money drop considerably because the market crashes. Again, we bring it back to previous points. The market will drop, the market will crash. That's when we stay calm and do not panic and continue to remain consistent in our investing. A plan acts as an anchor when the markets get rough. Without a plan, emotions take over. And trust me, emotional investing can be very, very expensive. And that leads us into number 5, control your emotions. This is the real edge in investing. No one ever talks about it. Fear makes people sell low. Greed makes people buy high. The market exists to test your emotions. Every correction, every headline, every crash is designed to shake out impatient money. Don't be one of them. As I said in my last video, the most successful investors aren't the smartest, they are the calmest. If you can control your emotions, stick to your plan, and stay consistent, you're already ahead of most people in the market. So let's do a quick recap of the 5 things. Think long term, invest consistently, understand what you own, have a simple plan, take control of your emotions. None of this is flashy and it ain't sexy, but it works, and it works over time. This is how real wealth is built. Thanks for joining, and if this helped you, give me a like, subscribe, and ask me anything, and I'll reply to all comments. This channel is about learning together. There's no hype, no sales, just real financial education. My next episode, I'm going to be talking about what you should invest in. I'm going to discuss diversification. I'm going to talk about ETFs, bonds, index, and single stocks. If that's something that you're interested in, then be sure to check out my video in a few days' time. I'll explain this at a level which hopefully you'll understand clearer after. And just to finish off, let's build financial confidence together the right way.